We welcome you to the 5th annual meeting of the unit holders of Embassy REIT. I'm Shweta Reddy, Head of Marketing and PR at Embassy REIT, and your host for today's meeting. We're hosting today's meeting in a hybrid format. So besides the unit holders present with us live here at the venue, we also have participants joining us online through a video conferencing facility in accordance with the SEBI guidelines. First, a few instructions for our online participants. The video conferencing facility enabling virtual participation in this 5th annual meeting opened 30 minutes prior to the scheduled time and will be available for 15 minutes after the scheduled period ends. Unit holders can use this facility on a first-come, first-served basis to join today's meeting. Embassy REIT is also hosting this 5th annual meeting live on its website at www.embassyofficeparks.com. We encourage all online participants to refer to the instructions provided in the notice convening the annual meeting. Please note that after the 5th annual meeting proceedings, the NSDL portal will remain open for 15 minutes to enable the unit holders to cast their e-votes. We will also host a question and answer session towards the end of the meeting, and any unit holders who wish to express their views or ask any query may do so then. The unit holders present in the room may pre-register their questions at the registration desk outside the room. Also, the unit holders joining us virtually may ask their queries by clicking on the Q&A tab on their respective video conferencing screens. All unit holders will need to mention their full name along with their DP ID and client ID or folio number along with their question. A relevant person from our team shall answer your query during the Q&A session. Now, let me take the opportunity to introduce you to your board of directors who are attending this meeting today. Joining us from this conference room, we have with us Mr. Jeetu Virwani. He's a non-executive director and chairman on the board of the manager of Embassy REIT. He's also the chairman and managing director of the Embassy Group of Companies. He has over 25 years of experience in the real estate and property development sector. He's a fellow of the Royal Institute of Chartered Surveyors and a member of the Equestrian Federation of India. Mr. Aditya Virwani. He's a non-executive director on our board. He's also the chief operating officer of the Embassy Group and is on the board of several Embassy Group companies. Also, joining us online, we have with us Mr. Vivek Mehra. He's an independent director on our board and chairperson of the audit committee. He was with PricewaterhouseCoopers for 19 years and retired as a partner in 2016. Mr. Anuj Puri. He's an independent director on our board and chairperson of the investment committee. He's a fellow of the Royal Institution of Chartered Surveyors and a fellow of the Indian Institute of Insurance Surveyors and Loss Assessors. He holds the title of Chartered Insurance Practitioner from the Chartered Insurance Institute. Dr. Punita Kumar Sinha. She's an independent director on our board and chairperson of the Stakeholders Relationship Committee. She is the founder of the Pacific Paradigm Advisors LLC. Previously, she was the CIO for the Indian Fund Inc. and the Asia Tigers Fund Inc. She was also an MD at Oppenheimer Asset Management. Mr. Robert Christopher Heddy. He's a non-executive director on our board. He has been with Blackstone since 2000 and is currently the chairman of Asia Pacific and head of real estate for Blackstone. Mr. Tuhin Parekh. He's a non-executive director on our board. He has been with Blackstone since 2007 and is currently Senior Managing Director and Head of Real Estate India for Blackstone. The management team of Embassy REIT also joins us for this meeting. We have with us Mr. Arvind Maya, Chief Executive Officer, Mr. Abhishek Agarwal, Interim Chief Financial Officer, Mr. Ritik Bhattacharjee, Chief Investment Officer, Ms. Vinita Menon, Company Secretary and Compliance Officer. The following key persons are also attending the meeting. Mr. Bhavesh Vichare and Mr. Samir Kabra, attending virtually. Both are representatives of Access Trustee Services Limited, trustee to Embassy REIT. Mr. Adarsh Ranka and Mr. Nikun Shah, partners, both present here, representing SR Bartley Boy and Associates LLP, statutory auditors of Embassy REIT. Ms. Rupal Jhaveri, practicing company secretary, present here as a scrutinizer for this annual meeting. We will now play a short corporate video highlighting Embassy REIT's journey since listing. Can we have the video, please?
global captives continue to invest in India and India talent, NASSCOM expects the number of GCCs in India to increase to around 2,000 over the next 3 to 4 years, up from about 1,600. This demonstrates the growing demand for offshore solutions in the country. Embassy REIT's listing in 2019 has been a game changer for commercial real estate sector in India. If I look back, it's truly remarkable to see how far we have come since those early days in 2019.
India is a key market for Blackstone, where we've been a committed investor for the last 16 years. Indian office is an important investment for us, supported by favorable fundamentals and trends like an availability of highly skilled labor and India's role as a tech hub.
Over the last 4 years, we have grown our portfolio from 33 million square feet at inception to an industry-leading 45 million square feet today. We leased a total of 11.4 million square feet across 257 deals and expanded our occupier base by 1/3. We launched a flagship ESG framework and announced our 2040 net zero commitment. And we enhanced our net operating income by 76% to 2,800 crores, delivered close to $1 billion in distributions, and expanded our investor base by 20 times to over 80,000 today.
India is emerging to be the choice for global product and service innovation. This is complemented by the aspirations of a fast-rising middle class. We increasingly see high-quality workspaces playing a critical role in hosting the talent that fuels this growth. Embassy REIT has a simple mantra: to deliver and manage office spaces for the future of our tenants, helping them to create an ecosystem that fosters innovation, collaboration and growth.
Leasing continues to be the key business driver for us. Our offerings encompass not only state-of-the-art workplaces, but also a supportive infrastructure that enables businesses to thrive.
As long-term asset owners, we at Embassy REIT are always committed to ensuring that we meet the growth potential of our tenants and their employees. Our development pipeline is critical in this regard. Over 90% of it is in Bangalore, which is India's best performing office market, and 1/5 of our pipeline is already pre-leased to major multinational companies from diverse markets such as JP Morgan from the US, ANZ Bank from Australia, and Philips, the Dutch healthcare major. Our acquisition strategy is very simple. We look to buy high-quality infrastructure-like parks that mirror what we currently have in our portfolio. Our acquisition of Embassy Hub in North Bangalore is a perfect example of this strategy. And our ability to finance growth rests primarily on our AAA stable balance sheet that always allows us to attract the best financing costs in the industry.
As we look forward, we remain focused on delivering best-in-class office spaces to our occupiers, meeting the growing demand of the offshoring trend in India, while continuing to delight our customers and other stakeholders.
Embassy REIT has helped revolutionize the REIT landscape in India and transform the perception of office as an asset class. The platform has seen tremendous success over the last 4 years. It has a great track record of corporate governance and a great track record of generating cash flows for investors. We are excited at the future of Embassy REIT and its contribution to the growth of India and its capital markets.
Our strategy has always been focused on creation of long-term total return value for our 80,000 plus unit holders. On our 4th anniversary of being a listed REIT, I want to take a moment to thank all our employees for their continued commitment and focus on delivering a solid business performance in a challenging environment. I would also like to extend my sincere thanks to our valued unit holders, occupiers, business partners, and other stakeholders. Your continued support has been crucial to our success. Thank you.
Chairman for today's meeting, Mr. Jeetu Virwani.
Good morning, unit holders. It gives me immense pleasure to welcome you all today to the 5th annual meeting of the unit holders of the Embassy REIT. All reasonable efforts have been made by the manager of the REIT to enable unit holders to participate and vote on the items being considered in the meeting. On behalf of the Board of Directors of the Embassy REIT, I thank you all for taking us out the time to join us today. Since we have the requisite quorum present to conduct the proceedings of the meeting, I call the meeting to order. Our Board of Directors are joining us today from various locations. Before we start the main proceedings of the meeting, I would request my colleagues to introduce themselves along with details of the location from which they are attending the meeting. Dr. Punita Kumar Sinha.
Independent Director of the Board and Chairperson of the Stakeholder Relationship Committee. I'm attending the annual meeting from Italy.
Aditya Virvani.
Good morning, unit holders. I'm Aditya Virvani, a non-executive director on the board. I'm attending the annual meeting from Bangalore.
Vivek Mehra.
Good morning, unit holders. I'm Vivek Mehra, an independent director on the board and chairperson of the Audit Committee and Risk Management Committee. I'm attending the annual meeting from London.
Anuj Puri.
Hi, good morning, unit holders. I am Anuj Puri, an independent director on the board and chairperson of the investment committee. I am attending the annual meeting from Mumbai.
Robert Christopher Hedy.
Good morning, unit holders. I'm Robert Christopher Hedy, a non-executive director on the board, and I'm attending the annual meeting from Hong Kong.
Tuhin Parekh.
Good morning, unit holders. I'm a non-executive director on the board. I'm attending the meeting from my office in Mumbai.
Thank you. Dr. Ranjan Pai, the independent director, has expressed his inability to attend the meeting due to unavoidable circumstances and prior commitments. The process of this meeting is to give you, our unit holders, an update on the key developments of the Embassy REIT and to seek your approvals on the matters ahead stated in the annual meeting notice. This year marks Embassy REIT's 4th year anniversary since its listing in April 2019. As demonstrated by our results of 2023, the business is well positioned to benefit from the continued offshoring demand in India, and we continue to invest and cater to this demand. As you may know, in April we announced the appointment of Arvind Maya as the CEO of the Embassy REIT. Arvind played a pivotal role in the growth of Embassy REIT since its listing as a CFO and was instrumental in driving its success. I'm delighted to welcome Arvind back. Under his leadership, we look forward for taking the Embassy REIT to greater heights. I will now hand it over to Arvind to present our business highlights for the year and our forward outlook and strategy. Arvind.
Thank you, Jitu. Good morning to all unit holders and a warm welcome to the 5th annual. For the next 10 to 15 minutes, I will take you through a presentation which covers how the year went by and how we see the year as we move ahead. Just to start with a slide which captures how the year went by in one single slide. We leased about 5.1 million square feet last year, beating the guidance which we had given at the beginning of the year. We accelerated our organic growth by launching close to 7.9 million square feet of development, which includes a one-of-its-kind 1.2 million square feet of redevelopment in Manyata, which increases the area by almost 3 times. We did a small acquisition of a property by name Embassy Hub in the northern part of Bangalore, which I believe will be very accretive to unit holders in the long term. Our balance sheet continues to be healthy at 28% leverage and almost 60% of the debt carrying a fixed rate of interest. We've been pioneers in our industry in relation to our overall ESG program, which is evidenced by the fact that we are one of the largest world's GBC Platinum certified portfolio in the world.
Moving a little bit into what I believe is the heart of our business, which is leasing. As I mentioned, we did about 5.1 million square feet of leasing last year, which is the maximum we've done since the inception of this portfolio. But I would say there are three key messages over here. One, as you see over here, we did about 2 million square feet of new leasing and 1.8 million square feet of releasing, but all at a healthy 16 to 17% renewal spreads. What that means is, even though the market has been a little soft, for best quality properties like ours, we are still able to lease it at the market rate. Number two, the 5.1 million square feet of lease up, we achieved over 100 deals. So on an average, it's around 40 to 50,000 square feet per deal, which is a little lower than what it used to be pre-COVID. But more importantly, we added 44 new occupiers to our portfolio, which is an increase of 25% on our customer base. And a lot of these are first-time entrants to India, and we believe that as these companies grow in India, they will grow in our portfolio. A lot of the India commercial office leasing over the last couple of years has been in relation to what's happening to the global captives and their growth story in India. Just to rattle out a few numbers, as per a recent NASSCOM report, the number of GCCs is expected to increase from 1,600 to 1,900 by 2025, with a market size of $60 billion. As per a EY report, which went a little more into the future till 2030, the number of GCCs is expected to increase to 2,500 from 1,600, with a market size of $110 billion, and more importantly, with an employment of close to 45 lakhs from the current 19 lakhs. So that can speak about the amount of space they will need in the years to come. This is already getting reflected in our portfolio when you see, because in FY23, close to 70% of the new leasing was done to global captives. And today, 55% of our portfolio is occupied by global captives. We continue to grow organically as well as inorganically. As I mentioned, we have 7.9 million square feet of development in our portfolio. You see some of the pictures over here. The top two pictures are actual pictures, and the bottom two are new launches, and you're seeing the perspectives over here. All these, we believe, will be very accretive to unit holders over the next few years as they are delivered. In relation to inorganic growth, to talk a little bit more about Embassy Hub acquisition, which we did, we acquired a building which is 0.4 million square feet, close to completion during the later part of this year, which is almost fully pre-leased to one tenant. We also acquired land on which we can develop 1 million square feet more. But what makes this acquisition even more exciting is the fact that this is located in the northern part of Bangalore, which I would say is the growth corridor for Bangalore. And second, we continue to retain what we call as the ROFO right with Embassy Sponsor. Embassy Sponsor continues to own rights over a larger parcel of land, and as and when they develop that, we have the right to acquire it, making this to be another total business ecosystem like some of our other parks in Bangalore. As I mentioned, all our growth comes with a commitment to our planet as well as communities. You see some of the certifications and awards which we've received for our portfolio over the years. Just to round up last year in terms of some financial performance, our revenue increased by 15%, NOI and EBITDA increased by 11%. That's largely because of the 1.1 million square feet of build-to-suit JP Morgan building which we delivered last year, as well as the contracted escalations of close to 5%, which is there inbuilt into our contracts year on year, as well as the new leasing at market spreads. More importantly, we delivered distributions of around 2,058 crores last year. And when you take the 4 years since listing, we have distributed 7,800 crores, almost close to $1 billion since listing. The fact that a vast majority of the 4 years since listing was spent post-COVID, which I would say was a black swan event for our industry, our distributions, we have continued to distribute, and our distributions have remained consistent year on year. That speaks about the stability of this product. So now the question is, from here where? As we look into the future, I would say there are two structural elements which work favorably to us. Number one, India continues to be the office to the world. That is because of the availability of talent at scale as well as cost competitiveness. This is precisely the reason why we saw the growth in tech and ITS industry over the last couple of decades, and we are seeing global captives growing for the same reason. And secondly, Bangalore has been the epicenter of growth in commercial real estate sector in India. When you see some of the numbers over here, 40% of India's exports come from Bangalore. 1 in 3 tech employees are located in Bangalore. Almost 50% of the new captive set up last year was from Bangalore. And when you link this to the fact that over 70% of our portfolio is located in Bangalore, and more than 90% of the new development we are doing is in Bangalore, I can say that this is a very good recipe for success in the medium to long term. It's very important to highlight some of the embedded growth levers which we have already in our portfolio. I would say there are 3 of them. Number 1, we today have around close to 5 million square feet of vacant area. As and when we are able to lease this over the years, you will see an increase in cash flows, leading to increase in distributions. The contracted escalations of 5% per annum or 15% every 3 years, we've been able to achieve that even in the worst of times. And as and when the leases come up for ultimate maturity, we are able to take the rentals up to market, which again increases the net operating income and in turn distributions. We have the opportunity to grow inorganically as well, as we have done in the last couple of years through the large Embassy Tech Village acquisition, which increased the portfolio by close to 30%. We have the ROFO construct with a sponsor. It works very well for the REIT because as a developer, the sponsor is able to do the more risk-oriented ground-up development while offering these assets to the REIT as and when it reaches a reasonable amount of stabilization. We continue to look at opportunities to grow from third-party acquisitions, and we believe we'll be able to do those as and when the overall market stabilizes. I would say this is a very important slide for the simple reason we are not just constructing standalone buildings. We are developing, as we call, total business ecosystems. Our parks include not just office buildings, it's a combination of retail, hotel, convention centers, food courts, sports zone, creche. This has been a real differentiator for us, which attracts top quality tenants to our portfolio. All the growth which I spoke about is supported by a very well capitalized balance sheet with 28% leverage and a headroom to grow in the form of close to 10,000 crores of additional debt. And lastly, we will continue to grow on a sustainable basis. We are backed by a well-entrenched and well-recognized 19 pillars of our ESG strategy, which has been well-recognized by our occupiers as well as our investors. Just to sum it up, I would say that it's been pretty turbulent times for us as an industry, but I'm very happy to say that we have emerged out of it much stronger. Our strategy to invest in total business ecosystems, as well as the organic and inorganic growth levers which I spoke about, will ensure that we are able to deliver accretive growth to our unit holders. I thank you once again for being a part of this organization. Thank you for placing the trust and faith in us as management, and I'm pretty sure that our 85,000 plus strong family will grow to many more lakhs and crores in the years to come. Thank you so much.
Thank you, Arvind. We will now conduct the Q&A session for the next 30 minutes or so. We will first collate all the questions from our unit holders present here, as well as virtually, and I'll then invite the management team to answer them together. Please note that Embassy REIT may limit the number of unit holders asking questions depending on the availability of time. We've already started receiving a few questions from our unit holders to the live chat. Any other unit holders joining us virtually who wish to ask a question may do so by clicking on the Q&A tab on their video conference screens. I would now invite our unit holders present in the room to please come up to the podium and ask their queries. Yes, sir. If you can please come up to the podium.
Hello?
Mic working?
Hello? Respected Chairman, sir, and all the directors and all the fellow shareholders. I am Manjunath, an ex-member of Mangalore Stock Exchange, and I am the shareholder with 11218169 is my folio number. So I am glad to see very transparent and exhaustive narrative that you have given, taken a lot of time to come up with the 570 pages of the annual report. I congratulate at the outset. So I'm making a, truly a real estate investment trust as what SEBI was calling with transparent mode. So now I'll come to the negative factors. What hurts to the unit holders from the date of the issue of 350 or some price, I think IPO. Now even today it is quoting less than the net asset value of around 394. It is stagnant even the last year and also this year. So the problem with the market is always, market looks ahead, what is the earning per share, so in the case of per unit. So it has been constantly at the 300 rupees issue price at 30,000 crores. Our capital, I assume to say, I am comfortable with the crores. I am not comfortable with the millions. So that is what your balance sheet was quoting. So basically, the earnings are not that great. So the main factor is you are, fully bent on the office cluster. So what I suggest, maybe it will work out or it will not work out. It is your idea and a perception. Hospitals and hotel management. These are the untapped area, because at one point of view you say that you have got about 2 lakh employees working under your roof. So at any point of time, going from anybody getting into some problem with the health issues, going to nearest is I think Astor or something like that. So Golden Hour is only about 30 minutes. I think 30 minutes will go from the campus to the gate. It will get exhausted. So this is one area, and hospital also is a very lucrative business. In fact, in the you can see the quoted shares are quoting very high premiums like Apollo and all these companies. So either way the joint venture, or you say no. You have got a lot of spaces which are lying vacant. So these basically hospitals and mid-sized hotels, maybe 5,000, 7,000 range. So there is enough potential. So to make these, or even marriage convention centers. In fact, somebody from Andhra, he was coming and telling me he was on a client. So there is no big, very big convention center which can cater to 1,000 to 1,500 with the what you call parking area. So within the city, not necessarily, it could be outside also. So these are drawback with the Bangalore. What is, hurting the Bangalore growth as a Silicon Valley, lacking the basic infrastructure. So these are the 3 areas. So companies should concentrate, because at the end of the day, so these are plug and play people. I don't say the plug and play. So the people who are coming to invest or have the offices like 230 plus you are telling. So they look at the human resource, how much cheaper it is there. Moment it becomes costly, or moments become irrelevant or unemployable, or maybe technologies like you can say machine learning or robot, AI, whatever, they take place. So they'll just vanish and they'll close the shops. In fact, even today emphasis is only on the Bagmane Tech Power, because they're paying about 60, 70, 80 rupees per square feet rent. So why it is become, we as a landlord, we are looking at whether they are paying 100 rupees, something like that, or 150 rupees, something like that. But they at the level, what it costs to the, at the end of the day for a product you need to, sell in the market. So because of that, consider the dependence in the office cluster. To some extent, now it is at 35%. We brought down to maybe about 15, 20%. So that is and because of the all this, finance cost is huge, maybe around 890 crores or something like that. So these are the main areas of concern. And the main thing that what I was saying, AM, I think annual general meeting is annual general meeting only. It was coming in the annual meeting. I don't know when this translation has taken place. Maybe COVID has brought the one word down, I think. Annual general body meeting, AGM, annual general meeting. It has become AM in all the wordings. So please correct yourself, and or maybe this becomes a tradition or convention. Okay, I will leave it. Thank you, sir.
Thank you, sir. Thank you so much. Please, sir.
Good morning. I am Krishnamurthy. Thank you, Chairman. So I have only one thing to understand. While Mindspace and other REITs mostly work on capital, so we are leveraging 28%. The finance cost may come to 8.5%, whereas the return will be 2.5%. So it is a capital diminishing proposition. So what I just want to understand how we are, over a period of time, well, the office values appreciate, then we would be able to get. So what is the thinking of the management on the leveraging? Because most of the REITs have very less leverage. So Embassy is a higher leverage. So unit cost will come down, obviously. maybe over a period of time it will increase. I just want to understand, so what is the thinking of the management on the leveraging?
Thank you, sir.
Thank you very much.
Please come, sir.
Good morning to all. I am Subramaniam MC. My folio number is 302 148 111 56 530. Actually, I need not talk anything about the accounts or anything. By seeing the strength of this company, this transparent video, this one, actually my mouth is shedding. I need not tell anything because the situations, the COVID situations, all other things prevailing in the country, that made any company to show a greater performance. I am confident that this company will show better performance in the future years. I know that. But the only thing is your current liabilities are more than the current assets. That's the only disappointing statement. Current liability should not be more than the current assets, which damages the current ratio. Well, when borrowing from the banks, they will see the current ratio and EPS, everything, and ROE also. So those things you have to take much care. And first of all, actually, I would like to thank the company and management for having conducted this meeting physically, because no other company except this one. One company has conducted this physical meeting. This is the second company which has conducted. ABB is the first company which has conducted the meeting physically. This is the second company. I congratulate and thank the management for having conducted the meeting physically. Okay, thank you.
Thank you. Thank you, sir.
Sir, 1 minute. But the timings, this 9:30 is too early, sir. Because people coming from faraway places, it gets very difficult. Because myself, I am coming from 40 kilometers. Banshankari 6 stage I came. I left my house by 7 a.m., sir. Okay. Please change the timings, at least by 11 or 11:30, followed by lunch. Okay.
Thank you.
Thank you.
Any further questions from the audience? Okay, sir. You already. Okay, sir. Then if you already sent, that's fine. But if you would like to ask your question again, please feel free.
Hi, good morning to all of you. My name is Aditya K. From what I understand is the net asset value, fair value per unit is around 396 rupees or something, the latest one. I'm really baffled by the way the stock price is falling. In the same period as Embassy has been falling, Sensex and some reality stocks have been shooting up. So that's very baffling.
Thank you. Thank you, sir. Any further questions? While our team collates the questions received virtually, we will play a short video showcasing our ESG program.
To be environmentally conscious, socially responsible, and a governance-first business is a journey that Embassy REIT embarked on years ago. We have adopted an industry-leading ESG framework to guide us towards our 2040 net zero goal. Our ESG strategy is built on 19 specific programs with committed investments, clear targets, and action plans. Every day, we continue to be driven by our core purpose of creating and operating world-class, wellness-oriented spaces for our occupiers, and thereby helping build a sustainable tomorrow for the communities at large.
Harnessing the power of clean energy, Embassy REIT is committed to achieve net zero carbon emissions by 2040 across its operational portfolio. 3 decades ahead of India's 2017 net zero target. In line with this, the company has launched a 75-25 renewable program aiming to achieve 75% renewable energy usage by 2025. an existing 100 megawatt solar plant as well as one of Asia's largest solar rooftop projects to install 20 megawatt solar panels are central to achieving this. Recognized as the world's largest USGBC LEED Platinum office portfolio, Embassy REIT has pioneered several initiatives to reduce energy and water consumption, as well as to promote waste recycling in its properties in partnership with its occupiers.
ANZ's purpose is to shape a world where people and communities thrive. And we have an incredible partner in Embassy REIT, providing us world-class infrastructure and sustainable buildings for our employees in India. In particular, their focus on renewable energy adoption is highly commendable.
Embassy REIT's ESG program has been recognized by multiple global ESG institutions such as GRESB through its highest 5-star rating, and the REIT's development portfolio has been ranked number 1 in the Asia's office sector. Embassy REIT has also brought in the green impetus to its balance sheet by raising an impressive green loan book.
At Embassy REIT, ESG isn't just a buzzword, it's in the ethos of how we run our business. Whether we are pioneering an environmental framework for commercial office in India, creating a foundation for future generations of skilled workers, or adhering to the best-in-class corporate governance practices and disclosures that facilitated our listing as India's first REIT, we are constantly pushing ourselves to live by the ESG guidelines we espouse.
Underpinned by its philosophy, together we can do more, Embassy REIT is championing a collective action for increased social impact through partnerships with other corporates, NGOs and the government.
At Embassy, our Corporate Connect program aligns our CSR mandates with those of our occupiers in areas of education, environment, skill development and health. Our responsibility as a group goes beyond our business. We have been nurturing communities around our office parks for over 6 years in a very holistic and sustainable manner.
Resilient planet, revitalized communities and responsible business, and a vision of net zero by 2040. That's the commitment and unwavering mission of Embassy REIT.
People today are far more environmentally conscious, and as a corporate, it's our duty to not only meet their expectations, but to exceed them. For us at Embassy, working towards building a sustainable environment is integral to the way we operate and what we stand for. We are very pleased with what we've achieved so far, but it's a journey that's just begun, and together with all our stakeholders, we aim to continue to grow sustainably.
The first question is on the stock price. We've received this question from Mr. Aditya K. and Mr. Anand Shah. The question is, what is the reason for the consistent decline in the stock price for Embassy REIT? How do the payouts compare against other products like FD?
Thank you. I'll request Ritik to take this question.
Sure, thank you, Arvind. Good morning, all unit holders, and it's a pleasure to see people in this room. This is the reason why we've gone ahead and actually conducted this in person, to take questions, to converse with you, have a dialogue with you on the structure, on the sector, and really talk about sort of both the product, the stock price, and everything else in the most transparent manner. So I think from our perspective, we are also, to use the word, so who came up to the podium, we're as baffled as you are as to the performance of the stock relative to how strong this company actually is. But I think there are a couple of reasons for that. And I'm not going to sort of talk about sort of where the stock should be, or clearly, you know, we have certain views on it. But if you look at the fundamentals underlying this business, as both the chairman as well as Arvind pointed out, this product has completely transformed the capital markets in India. If you think about sort of the growth levers, the way that we have made commercial real estate an asset that all of you as unit holders own, right now, you own real estate. You own real estate that is professionally managed, that gives you has given you 8,000 crores of distribution since listing through a pandemic. It has been able to sort of give you the ownership of world-class office assets that companies like JP Morgan, like the global sort of company, the tenants that we talk about that are in our portfolio, the 230 occupiers, you are now owners of that alongside us, and our fundamental focus in this is to deliver growth to you. The distributions that we give you quarter after quarter points to how stable this business is. The leverage that we spoke about, there was a question on leverage, talking about sort of why is leverage so high. In our view, the leverage is actually very, very conservative. We cannot go more than 49%. We have very comfortable thinking about leverage sort of just in the 30% just to fund the growth. All of this points to a very healthy business in an environment where, unfortunately, the stock price has not performed. We admit that. We recognize that. There are some macro factors that are contributing to this. There has clearly been a lot of global volatility. Office globally has performed very poorly compared to office in India, number one. The interest rate environment has been very difficult for most companies, yet we have contained and we have maintained a very prudent sort of balance sheet. And if you look at our results, year after year, we have consistently leased buildings. We have brought development online in a timely manner. We have bought growth, and we have distributed 8,000 crores. For a real estate company in this country, that is practically unheard of. That is what we will continue doing. And over time, I think our advice to all our unit holders who are worried about the stock price is that have the patience to stay with us. We understand your frustration. We know that this is something that does not match the reality of where we think the stock should be and the intrinsic value. But all our growth levers, as Arvind pointed out, are something that we will continue to deliver every day. We will continue to work on developing and making sure that we can fund what we currently own. We will buy future growth, and we will continue distributing to unit holders. And over time, the stock, we are confident the stock will re-rate to levels above what it currently is.
And if I can just add on, a lot of the stock price is also driven by what's happening globally and the sentiments around commercial real estate globally. But India is a different environment. In the process, there has been an evolution of our shareholder book as well. There's a lot of domestic institutions coming and buying stock. That's number one. Number two, just to reiterate this is a cash flow product. And for us, we are committed to increasing the distributions over a period of time, for which what is important is we continue to lease well, increase the occupancy, grow the organic developments which we are doing, and at a right point in time, grow inorganically as well as the capital market stabilizes. So as Ritik said, it's our sincere request to all our unit holders is to have patience in us. We are fully committed to delivering our cash flows.
Also to further add is that I think the leverage question is more that probably ours is the only REIT which has actually grown in terms of square footage also. The acquisition of Embassy Tech Village actually took the leverage a little high, and if I'm not wrong with the numbers, Embassy Tech Village has been one of the best investments the REIT has done in this acquisition. So the REIT is not only about getting return, but also if you start looking at the REIT in a way that how much each REIT grows. Growth being a very important factor in the long run, as you see in the presentation, that there's a lot of under construction which will start paying over the time. And yes, of course, right now, office is a bad word globally, but India has always been different. And personally in my career, every time there's a crisis in the world, the office market in India actually moves up. And this is exactly where it's kind of heading. So I think we should be patient, and I think we also as a management have to do a lot to educate the retail investor, because still we see in the market a lot of standalone buildings being sold at a much lower return than what the REIT is giving, and people still believing in owning a document which says a particular square feet is in their name, rather than buying a REIT unit, which is actually the most sensible thing to do, in fact, in terms of taxation also. So I think it's a new product, and it's taking its time, and like Arvind mentioned, we were hit by COVID. I think in the long run, and somebody else also mentioned the value, which has not been reflected in the price of the unit. So I think all this will come in good time. But for us at the management is, just to continue running the company with clean transparency, corporate governance, and continue to be number one in this area as we've been for the last so many years. Thank you.
Thank you.
Thank you, Jitu.
Our next question is from unit holder Ms. Anju B. The question is, what are the key drivers for Indian office leasing demand?
Thank you, Shweta. So let me take that. As I did mention, one of the key drivers for office leasing, what's been there last, say, couple of years and what we are seeing in the years to come is the growth in global captives. Just to repeat some of the numbers, last year, close to 100 new captives were set up in FY23. And as per reports, close to 115 to 120 new captives are being set up in our country on a yearly basis. This, we believe, will continue to drive the office leasing demand in the short to medium term. Having said that, what is to be taken note of is, while these captives are growing, a lot of these are also jobs which are getting migrated from different countries to India. So while that's happening, they are also conscious of the fact that they do not want to enter into large lease contracts immediately. So that's the reason why, as I did mention, you're seeing small lease take-ups of 40 to 50,000 square feet, but with a clear visibility of what we see coming in the next 6 to 9 months. Just to give some examples, one of our tenants in Manyata Tech Park, Target, started with a small base and over the years has grown to close to 10,000 employees and close to 7 lakh square feet in a park. Another example is the way JP Morgan has grown, again a global captive. They took 1.1 million square feet and they've committed to another 550,000 square feet more. We believe from a captive's point of view, over the next 6-9 months, we should see a bigger trend emerging. The second part of the story is around tech, IT, ITS. You would have seen that that industry is facing a bit of pressure in terms of their margin and overall business growth. That somewhere gets reflected in our business as well because they have not been growing with us. Having said that, what I would say a trend to watch out for is these businesses have grown their employee headcount significantly over the last 2-3 years, but they have not been able to get their people back to office. Their return to office still ranges from, say, 25 to 35%. It has been, I would say, more of an employee market in the past, but we see those trends changing a bit to employer market. So I would just say that this is something to watch out for because these industries have also grown in terms of their headcount. We will need to be a little bit more patient with them to see how they evolve in terms of their space take-up in the years to come.
Thank you. The next question is from unit holder Mr. Venkatesh R. The question is, how does your REIT compare against the other listed Indian REITs?
Thank you. So let me start, and Ritik, you can chip in. The way I would like to address this is instead of necessarily comparing, I would say each of the REITs have their own strengths and uniqueness, but let me speak about Embassy REIT. We are pretty proud to say that we have probably the 3 best parks in India, which is Embassy Manyata, Embassy Tech Village, and Embassy Golf Links. All the 3 parks are located in the best market in India, which is Bangalore. We have some of the best occupiers. Close to 50% of our tenants are Fortune 500 companies. We have a track record of distributing for the last 4 years, close to $1 billion, as we did mention. We have a very wide unit holder base. It comprises of foreign capital, domestic capital, and more importantly, the retail unit holder base, which has grown significantly from around 4,000 4 years back to close to 85,000. And lastly, as I did mention, we are well placed in terms of our growth levers, the organic as well as inorganic, which I mentioned. Ritik, anything to add on?
Yeah, I'll just add one point. I think this entire REIT sector now has 4 REITs, probably around 85 million square feet of office assets, and you've obviously got the new retail REIT that listed last month. And it's a great accomplishment for India, for the Indian capital markets, but I think it still goes back to one thing. None of this would be possible without Embassy REIT having listed first. We listed first because we had the best assets in India's best office market, and that really paved the way through a pandemic to allow 2 other office REITs to list at a time when office was not struggling worldwide. And then obviously the performance of all these structures together paved the way for the new REIT to REIT. So I think to list. So I think from our perspective, while it's not sort of a competitive environment, it's very important for all the structures to coexist, to allow unit holders like yourselves to have choices, to understand sort of how the structure works across different markets, gives you the ability to invest based on your asset allocation, what your return profile is, and you can't just have one REIT in a market. But I think what's important is that we as a management team focus on the quality. We have always prided ourselves on being sort of the largest sort of REIT in the best possible markets, and we always look to differentiate ourselves from other competitors, from other products as well, and driving value to yourselves as unit holders. But it's very important for us to make sure that we give you the option to invest in a quality product and give our tenants the options to also invest in quality products in quality markets.
The next question is from unit holder Mr. Malav Sherdalal. The question is, when will REIT instruments be eligible for availing loans from banks or NBFCs?
Thank you. Can I please request Abhishek to take this question?
So, hello. Yeah, so this topic is actually very important for us also. We have been meeting the regulator and doing a lot of policy advocacy. Currently, we see that banks are not allowed to lend at the REIT level, but they continue to lend at the SPV levels, which are companies. So we continue to do the policy advocacy and see when this can be possible.
And if I can just add on, we are in constant touch with Reserve Bank, and while they've allowed it for InvITs, they do have some concerns on why they don't want to allow it to REIT, but we've been constantly speaking and addressing to them. But what is still good for us is banks can lend to the SPV level, so it's not that we don't have the access to banks at all.
The next question is from Mr. Chandramouli Jagannathan. The question is, what is the expected NDCF growth with occupancy going up? Any update about the Chennai ROFO acquisition?
Thank you. Can I please request Ritik to take this?
Yeah, I think just on giving guidance on growth right now, I think we take that in totality. At this point in time, clearly given where sort of the office market is globally, we've refrained from actually giving guidance simply because there've been a couple of global factors that have affected sort of the overall sort of sector as a whole. But I think what we try to do is that every time we come into earnings, which again is coming up, we take sort of the guidance aspect and giving you as best a view of the business as possible. So at the time we actually come into earnings, we will have sort of a further update on that entire sort of process of what DPU looks like, what growth is. But rest assured, from our perspective, the DPU is something, growing distributions is first and foremost in our minds. Over the last few years, unfortunately, that is something that while we have distributed, there are clearly macro factors that have impacted it. But going forward, we always sort of make sure that we are constantly trying to optimize the business, run the business to put distributions in unit holders' hands and grow those distributions.
On Chennai ROFO.
There was a Chennai.
Yeah, on Chennai, again, I think we will have sort of, we are always evaluating sort of the ROFO and the entire sort of acquisition process. The capital markets for the REIT and overall has not been conducive to funding an acquisition. The way that acquisitions work, as I also pointed out, is when you buy an asset, we must fund it from external sources, either using equity or debt. I think at the right time, given where market conditions have been globally, I think it has been very difficult to sit and raise capital at attractive terms. So, and managing our cost of capital so that we can actually distribute and provide growth is obviously our number one priority. So at this point in time, that has not been something that we've been able to do with the Chennai asset. Over time, as we evaluate, we will have further updates for you.
Thank you, Ritik.
The next question is from Manjunath. The question is, are we looking to expand our hospitals and hotel management business?
So thank you for your question. In relation to, let me take the hotels part first. We already own 4 hotels, close to 1,000 rooms across Bangalore. And we continue to construct close to 520 rooms in our Embassy Tech Village. As we did mention, hotels are a very significant amenity to our parks. This gives a lot of value to our occupiers and helps us in leasing to better occupiers. So we will stay invested in hotels, but more as an amenity in our existing parks. In relation to hospitality, sir, or specifically hospitals, our point of view is that is a completely different set of business requiring different skill sets. We are more into, as we mentioned, commercial real estate and the other amenities. So as of today, we are not necessarily looking at growing into hospitals. And lastly, just a small point on this annual general meeting, Vinita, you can address, but I think it's a wording which is used more in the REIT regulations, calling annual meeting than annual general meeting.
Thank you, Arvind. The next question is from unit holder Satinder Singh. The question is, market seems to be concerned about commitment of sponsors to the REIT. A clearer communication on this would greatly help.
Thank you. Can I just request Jitu Tuhin to take this question?
So firstly, I'd like to address that the Embassy Group and the Virvani family are fully committed to the REIT. And there is no change in our stand. As far as our shareholding or what is the question was it that
in terms of your commitment?
Commitment. So like I said, the commitment is there. Yes, like Ritik mentioned and Arun mentioned, the market has not been very conducive for Embassy to put some more assets right now with the stock price and the way the market is looking at it. So I think it's in the interest of the REIT that we've constrained from putting any more further Embassy assets into the REIT at this moment, which will happen over the time. And as far as shareholding is concerned, yes, it's true that we did reduce our debt at Embassy level by selling some of the REIT units, but that's to make a stronger Embassy and a stronger sponsor for the future. And it's in line with that. So going ahead, now we would be, in fact, looking to increase our equity in the stake as and time and opportunity comes by. I hope that answers your question.
Thank you, Jitu. Tuhin, if you can add on to this, if you have anything.
REIT 24%. We are committed to the long-term growth and alignment of the product. And therefore, we are fully aligned with all shareholders to ensure there's long-term value creation because it's in our interest as much.
Thank you.
Thank you, Tuhin. The next question is from Mr. Harsha. The question is, please comment on the revised taxation of REITs.
Thank you. Can I request Abhishek to take this?
Yeah. So the distribution that we gave, it actually comprises of three components. First one is dividend, which is totally tax-free in the hands of the unit holder. The second one is interest, which is taxable in the hands of the unit holder. And the third one is repayment of debt. Now, post this budget change, this component is not taxable in the hands of the unit holder at the time of receipt. What it will actually have an impact is it will go and reduce the cost of acquisition, which is your cost price, and it will be taxed as capital gain at the time of sale.
Thank you.
The next question is on the theme leverage and liabilities. The questions asked by Mr. Subramaniam, MC, and Mr. Krishnamurthy. The question is, why are the current liabilities more than the current assets? Are we comfortable with our debt levels as it is higher than peers? Does the company face any issue while refinancing any loans? Do we have to always refinance loans until the property is sold?
Thank you. Why don't I start and then Abhishek, Ritik, you can add on. In terms of debt levels, as Jitu did mention, we are today at around 28%. Very important to highlight that we are a AAA rated REIT, which is the highest level of rating possible. So from a lender's point of view, they're extremely comfortable lending to us as a REIT. From a comparison point of view, I think the leverage ranges from 18-19% for one of the REITs to 33-34% for the other REIT, which is much higher. But on an overall basis, I think from a unit holder point of view, what you should look at is what is the rating level, because as long as the rating is highest, which means that the leverage levels are comfortable, number one. Our lenders are comfortable lending money, and we get the financing at the most competitive rate. When you look at our loan book, our average cost is around close to 7%, which is probably the lowest when you look at the real estate industry. So just to sum it up, I would say that we are pretty comfortable with where we are in relation to our leverage levels. Abhishek, you want to take the current liabilities?
So we see that the current liability today as of 31st March is more than the current asset, which is primarily because there are a couple of NCDs which have come up for maturity in the later part of the year. So because of that, we have to disclose it as current liability. Having said that, because of our AAA stable rating and the access to various debt pools now, we are confident that we will be able to refinance these loans when it moves to non-current liabilities.
And just adding on, sir, what happens is even if we take a, let's say, 5-year loan, when it reaches the last year, when it is up for refinancing, that gets shown as current liability in the financials. So we would have taken a long-term loan, but in the last year, of course, it ends up being a current liability. But as Abhishek mentioned, there is zero risk of this getting refinanced. Yeah. Correct, sir. That's why it ends up coming under current liabilities. And also another point which I can add on is the lease deposits which are given by our occupiers are also shown as current liabilities, but these are occupiers not going for the next 3, 5, 10 years. So in reality, these are not repaid in the next 12 months. But because of the financial disclosure norms, it's shown as current liability.
The next question is again from unit holder Mr. Malav Sharedalal. The question is, do you have clarity on the Desh bill allowing partial denotification of SEZ buildings?
I would say that we've been waiting for clarity on this for a very long time. It is still work in progress. That's what we can say. We've been in constant touch with the regulators, including a discussion which happened a couple of weeks back. We know that it's at an advanced stage. Final discussions are happening between two ministries, Commerce and Finance. We are equally keen, as much as you, to ensure that this amendment comes through as soon as possible. But having said that, we are trying to control what is within what we can control, which is we are ensuring that the new buildings, what we're developing, are all non-SEZ, number one. Number two, whichever is a full building which is getting vacant, we are going ahead and denotifying that because that's already available. We've already denotified a building in Pune. We are close to denotifying a building in Bangalore. So we'll continue to do that. And we'll continue to lease the non-SEZ space, while of course getting clarity on this floor-by-floor denotification is extremely important for not just for us, but for the entire industry.
Thanks, Arvind. The next question is from unit holder Mr. Dilip. There are the 3 questions. I'll just go one by one. The first question is, there is an ongoing merger with India Bulls Real Estate with Embassy. How does this affect Embassy REIT?
Jitu, can request you to take this?
So I think, today's meeting is with the Embassy REIT, and, we'd like to limit all our comments as far as the Embassy REIT is concerned. And, as we've been saying, the REIT is basically an asset-owned company, and it's runs completed office space, so it's kept separately. The India Bulls and Embassy merger is an ongoing process, these are assets which we developed in the future when greenfield projects, and that has no relation to the REIT, which is separate from it, and it might, in the long run, the REIT might only benefit because if these two companies merge there are new projects which are conceived from these companies, they will automatically, as we being on Embassy being on both sides, would be offered to the REIT. So if it happens, the REIT would benefit from new projects and new completed assets. And if it doesn't happen, it doesn't affect the REIT at all, because the REIT anyway would buy only completed assets from whoever it buys, not necessarily being only an Embassy company. I hope that answers the question.
Thank you.
Thanks, Ritu. The second part of the question, again from Mr. Dilip. Embassy Group has a stake in WeWork India. Does this stake involve the REIT?
You want to
So WeWork, so the Embassy Group actually got involved with WeWork being a flexible office, because we saw in the long run that flexible office would be complementary to our traditional business. And it's proven in that fact in the last 6 years of WeWork's existence. In lots of ways, yes, the Embassy REIT benefits from WeWork in terms of energizing some of the buildings which we newly take up, and which makes more clients come in who originally probably start with in a smaller WeWork and then grow in the REIT portfolio. And we have quite a few examples, Commonwealth being one of the most biggest examples. So I think so anything which Embassy does that is related to office field is ineffectively connected. And yeah, I mean, I think both companies benefit from each other. Embassy REIT and WeWork does also benefit from the REIT. I wouldn't just say that the REIT benefits, or it's either way. And as you're all aware, then every quarter the take-up of flexi space has been going up in terms of percentage. If I'm not mistaken, last quarter I think it's about 30% of the leasing which has been done in the market. And I think, so naturally, WeWork being an Embassy company, it's aligned more to take space from the REIT, which benefits the REIT in terms of occupancy. Thank you.
And if I can add on from Embassy REIT point of view, WeWork is another occupier for us. It's approximately around 2% of our overall portfolio. But as Jitu mentioned, it's a very important occupier, because what happens is a lot of new startups come and take small space in WeWork. But as they grow and expand, they naturally grow into our parks, because that is much more easier and convenient for them. So I would say it's a very good occupier to have from an Embassy REIT point of view.
Thanks, Arvind. The next question again is from Mr. Dilip. The question is there any plan to enter other Indian growth cities apart from Bangalore, like Pune or Mangalore?
Thank you. Can I request Ritik to take this?
Yeah, sure. From our perspective, we are already, so our markets, just so that you understand, we are anchored by Bangalore, which is India's best office market. 75% of our value sits here. And I'll explain why Bangalore matters so much to us. It's a strategic weapon for us. We are in Pune as well, a market that we obviously do see growth in. We're in Mumbai, and we're in the National Capital Region as well. Now, for us, growth has to come from sort of India's gateway cities. And so we're obviously, we have evaluated sort of Chennai. We think about Hyderabad as being a market. And the reason we think about these markets is because that's where our tenants, the GCCs that we spoke about, the world's biggest and best companies are always looking for talent. They will hire talent in cities where there has to be a very stable ecosystem, an education system where the migration of people looking for work, for a young population like India's that's looking for work in these kinds of companies, that's educated, where they go, the companies will go to hire. So that's effectively how we think about positioning our product for these companies. At this point in time, that demand lies in the gateway 6 cities of India primarily. So that's Bangalore, Bombay, you're looking at Noida, Pune, then obviously Hyderabad and Chennai. And Bangalore for us, frankly, is the reason why it matters so much is because it perfectly encapsulates everything I just spoke about, where there is great education institutions. There are lots of companies here looking for young, vibrant talent, and there is an ecosystem around sort of the young population that's also looking for work. The cutting edge work gets done for these companies, these global companies in this market. There's an 11% vacancy rate. Half the global captive centers sort of have set up shop in Bangalore, and that will continue to grow as India continues to grow. So, we like to be selective about the markets that we're in. We are very prudent about allocating capital. Remember, if we go in somewhere and we start building, there's something else that we have to sort of sacrifice in the short term. We want to be very careful about, especially in this interest rate environment, you think about what you can build, how you build it, what is the strategic outlook. So at this point in time, we'll stick to sort of the markets that we currently have, continue to selectively add assets, and obviously then opportunistically think about growth in other markets.
Thank you, Ritik.
Thank you. The next question is from unit holder Ms. Rupali Haider. Question is, what is the future plan in setting more hotels in IT hubs, as it is a very profitable business?
I think I kind of answered it. Our strategy around hotels is that it's a great amenity to have in our parks. So we will look at hotels similarly. We'll continue to develop hotels where required in large tech parks. But as we speak now, it's unlikely that we would undertake standalone hotel developments.
Yeah, like Maya said that Arun mentioned, the hotel is an amenity. So if you look at a hotel per se itself, an office contributes much more revenue to the company. But the hotels, we've seen in our track record with the first Hilton and Golf Links that it enhances our rents. So the rents or the office space moves up, which is, so let's say example in a park like this where we have about close to 15 million square feet and we have 2 hotels. But these hotels engineer the rise in rents of the balance 14, 15 million square feet of office space. So it's kind of an amenity and we would continue to do this because it's a safer option as far as the REIT is concerned, because we have a lot of captive and over the years we have some sort of a science that, as so many million square feet can support so many rooms in that location, and I think that's what it is. And just for your information, this hotel where we are placed today is actually, even though the Manita Park is, I think, today at what, 40% occupancy? But still the hotels are doing well. So only once the park occupancy moves up further, I think the hotels will further do well. But we would continue to do these in our large parks where we have more than like 3 million square feet of office space leased out.
Thank you, Jitu.
Thanks, Jitu. The next question is from Mr. Satinder Singh from Eon Infotech. The question is, what is management's analysis of the challenges and the plans for each of the 4 parks that need to step up its occupancy? Tech Zone, Quadron, Oxygen, and Embassy One.
Thank you. Let me take this. Let me take the easier ones first. I think starting with 2 of them are in Pune, Tech Zone and Quadron. Tech Zone, I would say, has a reasonable amount of traction. It's in the phase 1 of Hinjewadi. We've done a couple of things. One, we have denotified one of the new constructions into non-SEZ. So we're already seeing traction over there, and the balance space, which is SEZ, is relatively smaller. There is potential demand from our existing occupiers who are growing. So I would say in the short term to medium term, this should get addressed. Second one, let me take Embassy One, again, an easier one to take, which is located in Bangalore, but a small property, 250,000 square feet. But as we speak, it's almost 60% taken up. And there is good amount of traction. As we've been saying since listing, this is a premium asset. So we don't mind taking some time to lease this to ensure we get the best of occupiers to this. I think, again, this is a building which we are not too concerned about and should get taken up. Then we come to 2 last properties, Quadron as well as Oxygen. Firstly, both these assets put together is approximately, I would say, a little less than 5% of the total asset value of REIT. So not very, very significant, number one. Number two, from a Quadron point of view, the reality is this is in phase 2 in Hinjewadi, a little too, all the traction in Pune in the last few years has been towards the eastern side. But we did visit recently to the city. A couple of points to highlight over here. One, eastern side, while there has been a lot of growth, there's a lot of supply as well coming. Towards the center part of Pune, there is no empty space left. What that means is, over a period of time, the demand has to come towards the western side, Hinjewadi, which is where we are. But Quadron is at the end of Hinjewadi. The second point is, there is a metro being built out, which is expected to be complete in the next 18 months or so. So there is a lot of traffic issue there, but the way to look at it is, we are long-term owners of these assets. So we will be patient. Over the next 18 months, as the infrastructure builds out, we believe, also we spent close to 30 crores in refurbishing this entire park. So I would say this is one of the best parks which is located there. We as management will continue to stay patient on this asset, and over the next few months to, let's say, 1.5 years, this should get taken up. It's a similar story with Oxygen, little distant, but there is a decent amount of traction which is building up. Both these assets, I think the summary is, we will continue to do the hard work, continue to keep upgrading our parks, and in the medium term, this should get taken up.
Thanks, Arvind. I think with that, we've reached the end of all the Q&A. Thank you all. I trust that we've responded to all your questions. In case we haven't been able to answer any question due to time considerations, you're welcome. Sorry? Sorry. Please, sir. So you can use the podium there.
First of all, I apologize for the delay in attending this meeting. Mr. Chairman, members of the board, dear shareholders, ladies and gentlemen, I am R. Muralidhar and my folio number is 120-35127. The very purpose of my coming late is that the meeting has started around 9:30. I feel, because I have been coming from, a lot of people are coming from far off places and the Bangalore traffic. Probably, if you are just postponing this timing by 12:30 or 1 o'clock, it will be very easy for us to reach. This is very important. In fact, morning I left my house around 6 o'clock and I reached here around 10:15. Though I wanted to attend the meeting at 9:30, I left my house at 6 o'clock. People are coming from 40 to 50 kilometers away from that. Please consider this postponing of your timings to 12:30 in the interest of the shareholders. Thank you very much.
Sir, if I can say, we sincerely apologize for the inconvenience caused. We take all of this feedback seriously and we will address this in the upcoming AGMs. Thank you, sir.
Thank you, sir. Thank you. And as I was saying, you can...
Good afternoon to the board and to all my co-fellow shareholders and to everyone, sir. Sir, my name is S. Ashok Chakravarti. I am very glad and feeling happy to attend this meeting, sir. And in this regard, I thank the board for being conducted this hybrid meeting called video physical meeting. And I am very thankful to you once again, sir. In this connection, small clarifications. I refer page number 242 and request you clarify reasons as already clarified, might have been clarified. But I could not understand this under current liabilities. It has gone up nearly to 43,500 millions. And at the same time, there is a column called investments of 8,157 millions. Here it is showing borrowings of 43,000 and investments of 8,000 millions. And simultaneously, or maybe because of that, interest on borrowings has gone up by nearly 90% to 3,245 millions as per page number 128. Just now you clarified the reason for market price, even though it is lesser than NAV. But what I personally feel is, even the average market price, if you compare it for the last 1 year or some time, now it is quoting very, very less rates, sir. Here, I am not saying anything about the management, but what I am saying is it may not be wrong to expect for the unit holders to get market price at least of the NAV or more than NAV. In this regard, what I am saying is, you clarified it about market price, but what I am requesting you is, I request the management to examine market-oriented measures in this regard, which includes to reduce negative other equity. I think negative other equity also has gone up, sir. In this regard, one more small request is, many hotel corporates are offering discount coupons to shareholders. Example, Indian hotels. So what I am requesting, please consider issue of discount coupons of Hilton hotels or other hotels to enhance the occupancy ratio and also to see that it will, encourage the market price also, sir. In this connection, I also informed this shareholders and this forum. Recently, in the last week, I am privileged to see the ET Now presentation of Mr. Anush Puri about Hilton hotels. And it was very happy and very well presented, sir. And I am thanking for that, sir. And I request you to consider whatever is possible, sir. Thank you.
Thank you, sir.
Thank you, sir. Can I request Abhishek to take the 3 questions around balance sheet and interest?
Thank you, Arvind. So, sir, on your first question regarding the current liability and current asset and the investment. So, if you see in the current liability portion, whatever is coming as borrowings, those, as we explained earlier, are the current maturity of long-term borrowings. Basically, these were long-term debentures, which is now coming up for maturity in the later half of the year, which is around Q3 and Q4. Hence, we have disclosed it as current liability. We are confident, because of the reasons mentioned earlier, that we will be able to refinance these loans, and then we'll take a long-term loan when it moves to non-current liability. In respect of your question regarding investment, which is coming in the balance sheet, these are basically investment which we had done during Q1 of the last year, where we had invested in the debentures of a joint venture entity, which was actually used to acquire the assets by the joint venture entity. Now, on the finance cost that you were mentioning, on page number 128, if you see, the finance cost has actually increased by 147 crores from 828 crores to 976 crores. This cost actually increased because of 2 reasons. One, during the last year and current year, we have actually delivered 2 hotels, completed 2 buildings, and we are also constructing, as Arvind mentioned earlier, 7.9 million square feet of office. So for this, we had taken loan, for which this capitalization has now reduced because of the capitalization of the asset. So borrowing cost capitalization has reduced, hence the borrowing cost. Also, the interest rate has increased, as you know, during the last year.
Thank you, Abhishek. If I can just take one more point on the market-related measures, I'll look at that point a little differently and say, sir, that we as organization are committed to increasing the retail unit holder base. We have undertaken some measures around retail awareness, going to different cities to spread the message around this product, what is a REIT and how it is beneficial to retail unit holders. We'll continue to do that during the later part of the year. And lastly, we take on board your suggestions, sir, around hotel coupons. We'll see what we can do in future. Thank you.
Any more questions from the audience? Please, sir. Sir, can you get on the mic? We'll just get it.
Sorry, very quickly, regarding the market sentiment, isn't changing the CEO every year affect the market sentiment?
Jithu, you want to take this?
So I don't think we've changed the CEO every year, but unfortunately, I mean, I think it's more positive for the REIT. I mean, Vikas, anyway, I'd actually like to take this opportunity to thank Vikas for his contribution to the REIT, and also he spent 12 years between Blackstone and the Embassy REIT. So I think it was just his personal decision to move on. And I think we're very happy to have Arvind, who was earlier the CFO of the REIT, and as the management, as a board of directors, we feel that Arvind will really take the REIT to greater heights. So I don't think that has anything to do with the market, but it's just been that office space in America has been a little down, and most of our investors are funds from America. So that's why the outlook is towards office space a little different. 3 weeks back, Aditya and me were in Singapore and meeting a lot of Ps, and all the Ps who have their investment committees in America are actually constrained of investing in office space, but all the Asian companies are actually looking to invest a lot in office space, and generally, as you can see on the ground and the results over here, there's a huge growth. So I think the market sentiments has nothing to do with the management. We have a really strong 110-member team.
Yeah, 120.
120-member team who's committed, and as you can see from the presentation and all the governance involved, all the compliance done in the REIT, it's world class. So I don't think I think we probably maybe in the next AGM, which will start at 12 o'clock, maybe it'll be better for you to notice what we do.
Thank you, Jithu. Thank you.
Thank you. Thank you. Thank you, everyone. And thank you again for being here. And you're please welcome to get in touch with us at the Investor Relations Department of Embassy REIT at ir@embassyofficeparks.com, and we will obviously respond to all of you. I would now pass it over to Ms. Vinita Menon, our Compliance Officer and Company Secretary, to take over compliance matters and resolutions.
Thank you, Shweta. Good morning, unit holders. Pursuant to the SEBI circular dated January 12, 2023, REITs are allowed to hold an annual meeting through other audiovisual mode without the physical presence of unit holders at a common venue. In order to enable the unit holders to avail the benefit of physical participation, we are conducting this annual meeting through physical presence at this venue and also through video conferencing mode in compliance with the SEBI circular dated January 12, 2023. In compliance with the provisions of SEBI REIT regulations, we have extended remote e-voting facility through NSDL to the unit holders to transact the business set out in the notice of annual meeting. The said facility was available from Saturday, July 8th, from 9 a.m. to Tuesday, July 11th, 5 p.m. We have received resolutions for representations from 216 corporate entities holding 31,84,06,344 REIT units, representing 33.59% of Embassy's REIT's total voting power. The relevant documents for inspection, as mentioned in the notice of the annual meeting, shall remain open and accessible to the unit holders for inspection during the course of this meeting. The unit holders can also request for an extract of the same by sending a request mentioning their name, demat account number, and mobile number to secretarial@embassyofficeparks.com. The notice dated June 14, 2023, convening this 5th annual meeting, along with the audited standalone financial statements and audited consolidated financial statements of Embassy REIT, as at and for the financial year ended March 31, 2023, together with the report of the auditors and report of the performance of Embassy REIT, has been made available to you in advance of this meeting. With your and Chairman's permission, I shall take them as read. The auditor's report did not have any qualifications. With the concurrence of the unit holders and the chairman, I shall take the same as read. Ms. Rupal D. Javeri, practicing company secretary, has been appointed as a scrutinizer for scrutinizing the remote e-voting facility as well as the e-voting at this annual meeting in a fair and transparent manner. Unit holders who have not cast their votes by availing the remote e-voting facility and who are present in this meeting physically or virtually will have an opportunity to cast their votes through an electronic voting system. Unit holders may please note that there will be no voting by show of hands. Unit holders present virtually and who have not yet cast their vote can do so through the electronic voting system in the manner described in the notice of the annual meeting. Unit holders present physically can use the e-voting desk which is set up outside the hall. The results would be declared after considering the e-voting during the annual meeting and the remote e-voting already done. The results will be submitted to the stock exchanges within 2 working days of the conclusion of this meeting, and the relevant resolutions will be deemed to be passed on the date of this meeting, subject to the receipt of requisite quorum, requisite number of votes in favor of the relevant resolutions. The results declared along with the scrutinizer's report would be placed on the websites of Embassy REIT and NSDL. The recorded transcript of this meeting shall also be made available on our website. With your permission, I now take up the resolutions which require unit holders' approval. I request one of the unit holders to propose item number 1 and another unit holder to second it. Thank you. Item number 1 of the notice to be passed with simple majority relating to the consideration, approval and adoption of the audited standalone financial statements and audited consolidated financial statements of Embassy REIT as it and for the financial year ended March 31st, 2023, together with the report of the statutory auditors thereon and the report of the performance of Embassy REIT. The text of the resolutions along with the notes is provided in the notice circulated to unit holders. I request one of the unit holders to propose item number 2 and another unit holder to second it. Thank you. Item number 2 of the notice to be passed with simple majority relating to the consideration, approval and adoption of the valuation report issued by IOS Partners, represented by Mr. Manish Gupta, partner, for the valuation of Embassy REIT's portfolio as at March 31st, 2023, with value assessment services provided by CBRE South Asia Private Limited. The text of the resolutions with the notes is provided in the notice circulated to the unit holders. I request one of the unit holder to propose item number 3 and another unit holder to second it. Thank you. Item number 3 of the notice to be passed with simple majority relating to the consideration and approval for the appointment of the valuer and value assessment service provider for the financial years 2023-24 to 2026-27. The text of the resolutions, the notes and the brief profile of the valuer and value assessment service provider is provided in the notice circulated to unit holders. I now request Mr. Jeetu Virwani, the chairman of today's annual meeting, for his concluding remarks.
With this, the 5th annual meeting of the Embassy REIT comes to a conclusion. I want to thank all the unit holders for their presence and involvement. My sincere thanks to the Board of Directors and the management team, and to all the unit holders present here today in the room and virtually, and also to those who couldn't join us today, but thanks for being part of our journey. We remain fully committed to the business and to deliver to our unit holders. I now authorize Mrs. Vinita Menon, Company Secretary, to conduct the voting procedure and conclude the meeting. Unit holders who are present in the meeting and who have not yet cast their votes can do so now by availing the remote e-voting facility. The e-voting facility will remain open for the next 15 minutes. The requisite quorum was present throughout the meeting. The results of the annual meeting will be announced by the Embassy REIT on or before 14th of July 2023. Thank you everyone. Have a wonderful day.
Voting desk outside the hall. We have also commenced the high tea in the refreshment area outside the hall. So request I would like to thank all unit holders for joining today's meeting. This concludes today's 5th annual meeting of Embassy REIT. Thank you.